Hello and welcome to FinextraTV. I'm Liam Xavier, and joining me today is Andros Gregoriou, Head of Research and Professor of Finance at Liverpool Business School, Liverpool John Moores University. Andros, lovely to see you.
Pleasure to be here. Thank you for inviting me.
Of course. So we're going to be talking about stablecoins and digital assets in general. Now, everywhere we go, we hear about it. It's quite overwhelming sometimes. I met you at a conference that was academic, and I think even some of the technical people were a little bit overwhelmed. If we just pare it back a little bit, come back to basics and foundational elements, what should people know?
It's quite interesting because the digital revolution is just going on exponentially. Stablecoins are very important. I think people need to know the sort of four different types of stablecoins. So the obvious one, the one that people just assume is a stablecoin, is when it's pegged against the US dollar. So Tether is a good example of that. But that's only one aspect. So it could be pegged against a well-known currency, like the US dollar, like the GBP, etc. It could also be commodity pegged onto sort of gold or silver or some sort of precious metal. It can also be pegged against well-known digital assets like Ethereum and Bitcoin, for example. But there's also the non-collateralized stablecoins, which are essentially not pegged against anything, and they're called algorithmic, where you keep the price stable by burning your tokens and making sure, for example, that you look at the circulating supply and you make sure that they remain to a certain level. So there's four different types. I think that's important for people to know because they automatically assume this pegged against the US dollar. They automatically assume that they are risk-free, but they're not risk-free. The idea of them is that people can be part of the digital revolution, but also can take out some of the extreme volatility, which we know in this business. So there's a clear rationale for them and why they're everywhere and why they're really, really important, and they're sort of taken over to some extent. But I think it's important for people to know the four elements of them. So because there'll be some stable coins that are really not stable and are actually very high risk and possibly higher risk than investing in, say, Bitcoin or Ethereum or some of the ETFs. So I think that's important for people to recognize.
Well, like you mentioned the volatility there, I think most people are going into stablecoins for protection.
Yes.
So what happens when we do encounter vulnerabilities, and how can we strengthen against that?
Well, it's quite interesting because obviously the idea of a stablecoin. So first of all, you need to know what it's stable against. So let's assume it's stable against the US dollar, which is obviously the most famous one. Well, you need to see that it's a one-to-one relationship with the US dollar. Now, you may assume that's the case, but it has to be fully backed. It has to have the cash reserves to make sure that it's a one-to-one. The other thing that's important is regulation. Now, often when we say regulation, we see that as the savior in this digital space. We sort of say, well, when the regulation comes in, here the regulation has to be careful in a way. Because if the regulation is very strict, and there's lots of reporting, there could be a situation where it goes away, it deviates away from the one-to-one relationship, which is not what we want from stablecoins. So in a way, maybe a principle-based type of regulation might be better in terms of keeping the stablecoin stable. So I think it's not a full conclusion, but I think that's the idea behind it. So, and again, what kind of stablecoin are you investing in? And then again, how is that stable? So I think it's important to keep an eye on it, making sure it's stable. So the fully backed is really important, the cash reserves, and also the regulation and how imposing that may be on whether that can remain as a one-to-one relation.
So you mentioned it a couple of times there, the vast majority of stablecoins are pegged to the US dollar, and most people assume they are. Why is this, and is it likely to ever change?
Well, it is because the Genius Act that was instigated by Donald Trump, and clearly the US dollar is the leading currency anyway. So it makes sense that it's essentially pegged towards that. But it will change. It will change because all the central banks are pretty much doing their own stable coin. I know that China is following, Japan, Hong Kong. There'll be the GBP and there'll be the euro. So what will happen is that there'll be more of these stable coins being established, and there'll be a lot of pegs against those ones as well. Obviously, the US dollar will still dominate, but they will also be part of the game. So the stranglehold will not be as dominant as it is now as time goes on. Absolutely.
And a lot of the conversations we were having before last year was very much focused on instant payments. Now that's shifting to stablecoins, but sort of in the same conversation because people want that speed and they need the good liquidity as part of that. What role do stablecoins actually play in allowing that?
Well, stablecoins have two components, two elements. The first one is the actual investment into crypto is more stable. Because obviously people want to be part of the crypto space, and the problem is that, as we know, they're supposed to be robust to inflation. So when there's quantitative easing, people should put their money in crypto because obviously they're inflation robust. However, what normally happens is you normally get financial advice, which is sell your crypto because they're seen as your non-safe assets or your risky assets. Stablecoins can change that, assuming that they're pegged and assuming that we have the one-to-one relationship and the regulation and so on. So that's the first element. Now, in terms of payments, they have a big role to play, which is another reason for the adoption of stablecoins, because we're using SWIFT. SWIFT is expensive. SWIFT takes a long time. The idea is that the liquidity of stablecoins will enable, through the blockchain, to get something much quicker and much more efficiently and much cheaper through time. So assuming they're backed, they make a lot of sense in terms of replacing SWIFT. And that's really another element of it. So safer investments and faster, more efficient payments in principle, rather than the traditional banking system we have now.
Fascinating. And one last quick question. A lot of what we're seeing in stablecoins seems to be overtaking the AI conversation now. From your academic perspective, would you agree with that? And also, is there a connection between the two?
Yes, I would, is the answer. I mean, I've been using AI in terms of financial prediction for years. I started my work in the Journal of Futures in 2007, for example, when we were predicting option prices. My recent work in Entropy, for example, that's been published, also uses AI methods to sort of predict cryptos. And the work I'm doing with rating digital assets, RDA, is also to do with using AI techniques to sort of predict cryptos.
Yeah.
Now, obviously, I think AI can be anything in a way, but I think stablecoins are taking over because, in my opinion, the reason that stablecoins are much better is they're more transparent. They take out the black box element of AI, which we really hate in finance and to do with prediction. Stablecoins are there. We know what they're stabilized against. We can see how it works. We know the price, which is a really important thing, because what's the price of Bitcoin? Nobody knows. The price we know should be a one-to-one relationship. And if it deviates away from that, then there's an issue of the stable coins. So I do think they're taking over, and I do think they're the future in this space, without a shadow of a doubt. Having said that, it's such a volatile market and things change all the time. You never know. But at the moment, I would say they are taking over. And I would say they are the biggest thing in this space for the time being, for sure.
That's a perfect and impactful point to end on, I think. Thanks for joining the studio.
Absolute pleasure. Thank you.